In this video, I'll provide a complete review of IVV, a popular ETF listed on the ASX. Let's get straight into it. Overview. IVV is the iShares S&P 500 ETF provided by BlackRock. As the name suggests, it tracks the famous S&P 500 index, which is made up of the top 500 largest US companies. So by investing into IVV, you're getting low-cost access to these 500 largest US stocks in a single fund. While the fund invests in US companies, it's domiciled in Australia. This means it's registered for tax purposes in Australia. This benefits Australian residents who invest in IVV as they're subject to Australian taxes and regulations rather than dealing with complex US tax laws and currency complications. You also don't have to fill in the W8BEN form, which prevents double taxation between the US and Australian governments. Being Australian domiciled also allows you to set up a dividend reinvestment plan for automatic reinvestments of your distributions. IVV pays distributions or dividends quarterly, so 4 times a year. Please note, while dividends and distributions refer to the same type of payment, they're used in different contexts. Companies pay dividends to their investors, while funds like an ETF pay distributions. Since IVV receives dividends from companies and passes these payments to investors, they're technically called distributions, although the terms are often used interchangeably. You can check out IVV's distribution history on their website. Looking at the distribution history, you'll see IVV makes quarterly payments, with the most recent distribution paid in April 2025. The ex-dividend date, also called ex-entitlement date, marks when the stock begins trading without the dividend. New buyers after this date won't receive the upcoming payment. The payment date is when the distribution is paid to your bank account. CPU, which stands for cents per unit, shows how much you receive per share. So the latest distribution was approximately 16 cents per IVV share. IVV offers automatic distribution reinvestment, where instead of receiving cash payments, your distributions automatically purchase additional IVV shares at a slight discount. If you want to know more, I'll include a link in the description showing how to set up a dividend reinvestment plan. Please keep in mind, while companies aren't legally required to pay dividends and choose to do so based on their profitability, many S&P 500 companies are established blue chip stocks with consistent dividend payment histories. Management fees. The management fee for this ETF is 0.04%. This means you'll only pay 40 cents for every $1,000 invested. So this is quite a cost-effective way for gaining exposure to US companies without dealing with US tax and foreign exchange fees. And better yet, this fee is automatically deducted from the ETF's share price, so there won't be any out-of-pocket expense. Top holdings. Let's now check out IVV's top 10 holdings. Apple is currently the largest company by market cap, followed by Nvidia, Microsoft, Amazon, Meta, which used to be called Facebook, Alphabet, which is Google's parent company, Berkshire Hathaway, Broadcom Inc., and Tesla. Please note, Alphabet appears twice because Google stock is split into 2 classes. One class has voting rights, while the other doesn't, although both generally trade at similar prices. These 10 companies represent approximately 35% of IVV's total holdings. For a complete list of holdings with detailed breakdowns and percentages, you can visit this area on their website. The holdings are updated monthly as company rankings can shift based on performance. One thing is always constant though. This ETF always tracks the S&P 500, which will always be the 500 largest US companies. If a company underperforms, it's replaced by a better performing one. Let's break down the sectors these companies represent. Unlike the Australian market, where financial and banking companies dominate, the S&P 500 is dominated by tech companies like Apple, Microsoft, and Nvidia, making up around 30% of the ETF. Financial companies like JP Morgan Chase, Visa, MasterCard, and Bank of America make up around 15%. Healthcare follows at around 11%, with companies like Pfizer and Johnson & Johnson. Then you have consumer discretionary at around 10%, with companies like Amazon, Tesla, and Home Depot. If you want to see the remaining sector breakdowns, you can download the complete holdings list from their website. Then you can filter by sector as shown on screen. I think it's fascinating to see these recognizable brands even though they're American and understand how they're classified. Performance. Alright, let's now look at IVV's historical performance. You can find this information in the performance section of their website. The performance data shows returns across multiple periods: 1 year, 3 years, 5 years, 10 years, and since inception on 15th of May 2000. As of March 2025, IVV has delivered average annual returns of approximately 13% over the past 1 year, 16% over 3 years, 18% over 5 years, 15% over 10 years, and 7% since inception. Please note these figures represent average annual returns. This does not mean you're getting those exact returns every year, it's just an average. For a more detailed performance per year view, let's look at the calendar year returns over the past 5 years. In 2020, during the pandemic, IVV returned about 7.5%, followed by 36% in 2021, negative 12% in 2022, 25% in 2023, and 37% in 2024. So overall, it's been a strong 5-year period. To put this in perspective, a $10,000 investment in IVV 5 years ago would be worth approximately $23,000 today, which is a 130% increase. Similarly, $10,000 invested 10 years ago would have grown to around $38,000, which is a 280% increase. But please remember, past performances doesn't guarantee future results. A $10,000 investment today may perform differently over the next 1, 3, 5, or 10 years. Consider historical performance as a guide only. For more comprehensive performance data, you can download the fact sheet from the documents section of their website. This fact sheet provides a detailed summary with key information about the ETF. Please note these returns account for management fees and expenses and assumes all dividends are reinvested. It's important to understand there are two main ways stocks make money. First is share price appreciation. For example, if you own 20 IVV shares at $55 each, totaling $1,100, and the price rises to $60 a year later, your investment is now worth $1,200, which is a $100 profit or roughly 7% return. The second way stocks make money is through dividends. When companies within the ETF pay dividends, the ETF distributes these payments to shareholders in the form of distributions. The ETF's total return combines both distribution return and growth return. Please note, you must pay taxes on both capital gains and dividends. With capital gains, taxes are only due when you sell your shares at a profit. If you sell your shares at a loss, you can use this to offset other capital gains. For dividends, you must pay taxes on all dividends or distributions received during the financial year when filing your annual tax return. In this case, IVV usually pays distributions quarterly, so 4 times per financial year. And you still need to pay tax if you choose to automatically reinvest your dividends. Alternatives. Let's now explore some alternative ETFs to IVV. Another S&P 500 ETF listed on the ASX is SPY. However, please note it is domiciled in the US, which requires additional tax documentations. QUS by Beta Shares offers an S&P 500 equal weight ETF. Unlike IVV, which weighs companies by market capitalization, giving larger companies more slice of the ETF pie, QUS weighs every holding equally. For Vanguard-specific alternatives, there's VTS and VGS. VTS is the Vanguard US Total Market Shares Index ETF. It tracks the entire US market beyond the top 500 companies and is US domiciled. VGS is the Vanguard MSCI Index International Shares ETF. This ETF includes top companies from developed countries excluding Australia, such as the US, Japan, UK, and Canada. While it offers more international diversity, the US still makes up around 74% of the fund. So it's still a US dominated ETF plus a few other countries squeezed in. I encourage you to research all available options carefully to determine which best suits your needs. Website and fact sheet. If you would like to do additional research, I'll leave a link down below to the IVV website where you can explore everything we've covered and more. And please remember, you can download their fact sheet, which provides a concise 2-page summary of all the key information for IVV. And one last important thing to note, when researching IVV, please note that there are 2 versions. The IVV ETF we're discussing in this video is listed on the ASX and can be found on the BlackRock website. There's also a US version of IVV listed on the US stock market, and you'll find this on the iShares website. Since they look and sound very similar, please make sure you're looking at the correct version. And quick disclaimer, this video is for educational purposes only and should not be considered financial advice. The ETFs I mentioned in this video are not buy recommendations and are only used as examples only. Please note, investing involves risk and past performance is not indicative of future results. Please do your own research and consult with a professional before making any investment decisions. By the way, if you're enjoying this video and made it this far, comment the words hot dog down below so I know who you are. And if you're new around here, what are you waiting for, mate? Hit that subscribe button and join this wonderful community of like-minded people. Also, please consider signing up to my free newsletter, Aussie Money Club, where once a week I'll send you some money tips, major news in the market, or any cool life updates from me. And if you're interested to learn how to invest in ETFs this year, check out this video on screen where I'll show you a beginner's guide on how to buy your first ETF. And as always, thank you for watching, I appreciate you, and I'll see you in the next video.